Good day, traders. This is Richard. I'm going to talk about how to do this business of trading. Everybody wants to make money that gets into trading. They get into trading because they hear that a lot of money can be made. But of course, a lot of money can be lost. And that's what you need to pay attention to more than making a lot of money. You want to avoid losing a lot of money while you're learning to make a lot of money. And that's what 90% of the people who enter the business fail to do. So what I want to tell you right up front is don't even open an account where you could lose some money. In other words, don't put the first quarter in the slot machine. Trade like these gamers do. You just compete against other people electronically, and you don't risk any of your money. And I don't care whether you're worth $500, $5,000, $50,000, $500,000, or $5 million, or $50 million for that matter. It doesn't matter to me whatsoever. I don't want your money. I've got enough of my own, and I love to teach. I want to help people learn to take 500 a day to keep the job away initially. That's our loss leader, meaning it's a 20-hour course that costs $500. And the main thrust of it is we teach you to take 500 a day to keep the job away. Now, there's a lot more to learn than just that 20 hours worth of education and training. You're probably going to need about 200 hours of training and 400 hours of study on top of the 200 hours of training over the course of your trader education program. But the first course is designed so you'll go away with something, even though you never come back for a second course. So we're going to help you understand what you need to learn and what you need to do to take 500 a day every week to keep the job away. Now, you're not going to take 500 a day all 5 days of the week because Mondays are hectic trading days, and so are Fridays. I made a little bit of money today. It's a Friday. It's already 12 o'clock in the afternoon in the Pacific time zone, and the market's going to close in a couple of hours. So I won't be trading anymore today. I will start trading either Sunday night or Monday morning to pick up our entries from our weekend research that we do on Saturday and Sunday for a couple of hours early morning on those days. All of our trading is done early morning because that's when the momentum is best. That's when the volume is up. That is a good time to trade before people go to work. You can actually trade in the Pacific zone, the mountain zone, and even the central zone before you ever get up and go to work. It's a little more difficult in the eastern zone because people go to work at 9 o'clock, and our 5 o'clock here is 8 o'clock in the morning. So you're probably on the road traveling to work already at 8. But this is the best 2 hours to trade every day, 5 days a week. But the best 3 days to trade are Tuesday, Wednesday, Thursday. Now, we work at our business 2 hours a day, 7 days a week, because on weekends, we study the markets to determine what's going to happen next week. So we can read the mind of the market to forecast the direction of the market and trade in that direction and make some money. Now, there's two kinds of trading. First kind of trading is intraday trading, where we take trades. I call them my right-hand trade. I'll explain what my right-hand trade is later, but right now, just suffice it to say, I'm looking for a special kind of setup that is a sell signal. And I find that by looking for the highest high in the neighborhood of candles that's on the chart. And I'm also looking at another indicator called the relative strength index to determine if it's overbought. And if it is overbought, in other words, the volume is such that so many people have bought that their buying is exhausted and it's going to start selling off. And that's what happens. And then it sells off for a period and it creates a cycle and it finds a bottom. And then you've got a left-hand trade, buy signal opportunity. And you get about one of those every hour to 2 hours on about 3 or 4, maybe 6 instruments. For example, crude oil, natural gas, gold, the euro currency. All that happens before the stock market opens at 6:30 Pacific or 9:30 Eastern. So what we're trading is not index futures, not stock related futures, but gold and oil and then currency and gas. And we try to take $120 to $250 out of each of 3 to 5 trades. Sometimes we only make 100, sometimes we make 300. And we take 3 or 4 trades, so we wind up with a little over 500 if we don't lose. Now, if you're going to take 5 trades, let's just say we can take 5 trades in a day, not all together, only 3 at a time, but they don't all mature at the same time. If you're looking at the currency, it may happen at 5:15. And then oil comes along at 5:30, and then natural gas comes along at 5:45. It doesn't happen that neat or that organized, but remember, it's wise to only be in 3 trades at a time. So you get in one trade, and then you look for another trade, and you take that one, and then if you make money on it, you take your profit, and if you lose money, you don't lose very much. We try for at least a 3-to-1 win-loss ratio, and we prefer to have a 4-to-1 win-loss ratio. So if we're going to invest $50, we'd like to get, we're going to risk, not invest. If we're going to risk $50, we want to get 150 minimum, but we prefer 200. But we can't just risk $50 on most of these items. We have to risk about $60 or $70, because if we only take a $50 risk, we get stopped out too frequently and too fast, and we cut our hands off to spite our face. So we need to risk a little bit more than $50. We'd like it to be 50, but it's hard to be profitable when you have a stop of only 50. So it's got to be somewhere between 60 and 70. Used to be we'd have it at 100, but we've wised up a little bit and we try to keep it at 70 maximum. Once we have some money, we tighten the stop to where it's near break even, only losing 10 or 20, and then we make a little bit more money, we tighten it to above break even. So now we know we can't lose any money on that trade. So that's the methodology of trading. And then we stay in that
RSI
trade
overbought
until it starts to oscillate in the opposite direction. And what you're hearing in the background, there are some signals to sell the Dow.
RSI oversold.
Or to sell the DAX because they're overbought. And that's good because we're in the week strong. On the Dow, the S&P, and I notice over here on the NASDAQ, they're all very, very strong right now. And the market's going to close in about an hour and 45 minutes. So I expect the market to close strong. And that is good news, in spite of the fact it's been a very ragged week. So that's the way we trade. We try to take $500 a day to keep the job away. And this is just an introductory promotional message that will enable you to assess the value of maybe investing your time and a little bit of your money to persuade us to teach you how to do this and make money the rest of your life by working an hour or two a day. We don't work 7 or 8 hours or 10 or 15 hours a day. We only work a couple of hours every day, all 7 days a week, but only a couple of hours. And everybody, whether you're retired or whether you're a teenager in high school, I've taught 13-year-olds to do this. My grandson, he studied this for about an hour a day for about 3 years in the summertime when he was out of school. He learned a trade. He learned to take money out of the market. And then now he's off in college learning how to be an accountant. So he's getting educated in finance and accounting, so he'll be able to do what I taught him to do on the side while he's doing other people's accounting. It doesn't have to be a full-time job. You can make it a full-time job, but it doesn't have to be. But you have to be willing to get into it and study until you get it. And then during this period of study, you're going to trade on the simulator. And when you get good enough on the simulator that you're consistent, then we'll put you in, we'll help you get an account in micro so that you need to make a deposit of about $400 in order to trade the micros. And instead of making $500 a day in micros, you make about 50 a day while you're practicing. And when you can take that micro account and double it, let's say open a micro account with $400. So in order to get into this business, you need about $1,000. You need to pay us $500 to teach you how to do it. And we will lead you by the hand all the way through it. And then after about 3 months, you'll need at least $400 to deposit so that you can trade micro accounts. And your mission is to double that $400 to $800 and double it again to $1,600. And that's doable over the next 90 days. And in the third 90 days, you migrate from micro to full size, one contract, full size, and you need about $2,500 in that account. You'll double that account to $5,000 and double that $5,000 account, which takes about 3 months, to $5,000, 2,500 times 2, and that takes another 3 months. So about 18 months later, you'll have yourself a really good size trading account. Now you can start gradually trading a 2-lot for a while, about 90 days, and then go to a 3-lot if you continue to make money. But if you get the big head and get cocky, somebody will punch you right in the snout and kick you in the stomach, and you'll fall on your face. So don't let the big head drag you down. Be careful all the way through the process, and be a Scrooge with your money. In other words, don't risk any more than you have to take a trade. Today, I took a trade, a 3-lot trade in crude oil at the high, and I picked up about $1,700 in the space of, no, it was $1,200. I had $1,700, but it started going against me, and I got out with $1,200, $400 in each one of the 3 contracts that I had in there. And that took me less than an hour. So that's pretty good pay for time. Just an example. I wasn't even planning to trade. I was just doing analysis of the market, and I saw the opportunity, so I took it. I've got a video on that. Ask me for it. Anyway, this is just a little promo. My name is Richard Rube, and I teach people how to trade. And you can find us on swissft.com. Let me show you that website. Here it is. Here's SwissFT, and we're in the weekly forecast section of SwissFT. Let's go to the home page. Here's the home page. You click on SwissFT up here, and then you want to fill out this little thing here where you put your name and email in, and come and try our Zoom room radio room. All we need is your name and your email address, and it's free. We'll give you an orientation, and you can invest a week for an hour or two a day in our trading room, and we'll show you what you'll learn, and we'll show you how you'll learn it, and we'll be there to help you. Thank you for your attention.